Greetings, Jedi traders. David here of TradingFibs.com to bring you a brief tutorial on the weekly charts posted in the weekly supplemental newsletter. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. Always make sure you have a solid trading plan and always manage your stop when placing a trade. All right, TradingFibs.com website. You can see each week posting the trading session focus for the week. We are looking at the futures, ETF, and market cap leaders. When you go ahead and click on that page and scroll just not too far from the top, you come right back down here. You see the weekly supplemental chart here together with the markets covered from the futures all the way down here to the total stock market indices and big picture. These other charts being posted in the newsletter. That's right, the technical momentum outlook. Over 85 pages, that's right, of charts indicating technical momentum and where price action is currently in trend. So let's go ahead over the chart key here, and then we'll cover some of those charts and how to use on an intraday basis. As you can see here, as posted on the website, there it is, a 4-hour chart on the left. We have a daily chart here in the middle, and on the right hand side we have a weekly chart. On the top charts here, a T3 moving average set to T3 5 exponential, T3 10 exponential moving averages represented by the white and red lines up in this area. And then we have a 144 EMA and 50 EMA charts. In the second row here, the middle chart, we have the guppy multiple moving averages represented by those in chart number 2, and then in chart number 3 all the way at the bottom we have the Heiken Ashi Colt study representing trend as well. Here on the daily chart, same time different time frames, same studies, T3 moving averages, with again using this time instead of an EMA, we're using the SMA, simple moving averages, a 50 and a 50 and a 200, and then on the right hand chart side we are using a 50 and a 200 as well on a weekly time frame. Also placed on the chart here, an average 2 range stop can be used for the either short-term trader investor all the way up to the weekly looking to hold on for the long term. All right, so there are 3 studies that we look at each week in the newsletters. So let's go ahead back to the newsletter for a moment, covering, as we know, the big picture on the SPX and the VIX to give an overall big picture for the market, and then we run through the key indices, giving an overall picture of where price action is by indicating here on the chart we have the short-term trend picture represented by the 4-hour chart. That would be the chart on the left here. All right, and then taking a look at the long-term trend when we're taking a look at the weekly picture, where is the current momentum? And so we're looking here in on the right-hand side chart supported by the 50 and the 200 multiple the 2 moving averages set to a simple moving averages. Again, chart number 2 down below represented by the guppy multiple moving average studies, and then the third chart down below indicating trend based on a Heiken Ashi Colt study. All right, and as each week we run through whether it be the market key indices from the SPX to the NYA, we cover the futures in depth through our weekly market recap, as well as looking at industry leaders here. We can see from the industrials all the way to healthcare. Again, same trend, looking at short term and then looking at the long term trend. After taking a look at the industry leaders, also taking a look at, as we just mentioned, the index futures, everything from the ES to the YM, covering the euro, the crude, and the gold. Also looking down here after the futures markets, we're taking a look at the ETFs for the futures. And here we go, ETF Futures represented by the diamonds all the way to the SPY, as well as from gold covering oil, emerging markets, and the 20-year bond. Also covering the market cap leaders, Apple, Amazon, Facebook, Google, Netflix, and Starbucks, as well as the FX pairs, taking a look at the Australian dollar to the British pound, from the Canadian dollar to the Japanese yen. Also taking a look at the total stock market index from the IYY Dow Jones, taking a look at the Vanguard stock market index, as well as the Schwab, and then following up with the Jason Kelly strategy, which you can find more information out at jasonkelly.com, taking a look at the IJR and the MVV, both short-term and long-term charts. All right, so how do we apply this on a big picture and then take this into the short-term picture? Again, if you remember, go back to the picture that we have here, which gives you the key, which you can also find not only in the supplemental charts each week, but you can find here on the website at tradingfibs.com each week, posted under the futures, ETFs, and market cap leaders. Taking a look at the Thinkorswim charts here as I'm using in this tutorial. Again, you can, whatever trading platform you're using the 3 trend studies or any multiple trend studies from a 4-hour chart to a weekly. Let's take the example for this tutorial using Amazon. We are now in April 2016 as price action closing out almost for the month. Amazon now on a 4-hour chart by reading T3 moving averages are in a bullish trend with a slight pullback. The 2 moving averages here, the 50 and the 144 EMA, indicating on a 4-hour chart that we are in a bullish momentum trend. On the second chart here, the multiple moving averages indicating that we are continuing this uptrend with the 2 Heikin Ashi bars pulling back. Downtrend we also see on the Heikin Ashi Colt study on the 3rd chart down here, also in a downtrend pullback. The indicator of whether Amazon will continue upside is up to the market itself. For this trader, if I was looking to get into Amazon in any long position at this point, I would definitely want to wait for the Heikin Ashi bars to go long again, solid body tail up. I know that my short-term trend is continuing to hold upside. I then jump over to the daily picture, which I see the T3 moving averages holding upside, and now a confirmation of the 50 and the 200 SMA on a daily picture are now crossing over on a daily picture, as well as the weekly picture for the long term on Amazon, which has been holding up for quite some time now in a long-term trend, which is at this point only in a pullback, which found support in its 50-period moving average, simple moving averages. I also look at the multiple moving average studies, which are also in an uptrend, as well as the Heikin Ashi Colt study, which is also in a trend to the upside and has been for some time since July 2015. Whether the options trader, the short-term trader, or the long-term trader, you are looking for an opportunity to re-enter on what you might believe fundamentally to be a strong stock. Technically, and purely from a technical perspective, using the 3 different time frames here, from a 50-144, I look for price action to either find support at one of these moving averages down here, or finding it at the 50 or the 200, both on a daily or weekly. Knowing that the weekly is holding up, solid body tail up, indicating that Amazon currently is in a bullish trend. Looking on the daily, knowing that it is a pullback, will follow through on the 4-hour chart, which will move a little bit faster than the daily and show confirmation to the upside. And so reading across the board, Amazon with a bullish momentum bias to it right now. We can also see that if in a long trade here, we see the average true range stops, which one of many different studies to, as you enter into a trade to the long here, you would place your stop at some distance. You would keep it perhaps on one of these levels indicated on the charts. Also in supplemental to the Amazon stock, if one were looking for an intraday setup, the same technique can be used from a 51.44 on a 1-minute chart. Here we could see from the last session closing out last week that Amazon having a very much of a bullish session here, whether you use a 1-minute or 2-minute, finding support at the 144 EMA. Let's go ahead and indicate there. There's our 144 EMA right here. And finding support to the upside, and also seeing that while price action may have started to the downside, found an opportunity to re-enter to the upside. Again, this pullback here that we just saw represented on the 4-hour chart, here on an intraday chart using a 50-tick range chart or whatever perhaps range chart of choice. Also, for traders wishing to use Fibonacci extensions, you can use a combination of not only the long-term picture of using a Fibonacci extension, but also a Fibonacci retracement. Currently in a trend to the upside, price action on Amazon after a pullback using the Fibonacci extensions from the low to the current high. Let's go ahead and get a Fibonacci retracement on there. Drawing from the lowest low. Let's see if we can grab that up to the highest high and seeing where price action will come back. But again, the place to have placed that Fibonacci retracement would have been right up here back in the end of February as price action came down to a 38% retracement level. Price action breaking above the 50 and the 200 period moving averages as it makes its way to Fibonacci target number 1 up here, 678.52 on a long-term trend picture of a Fibonacci extension. For the trader looking to enter into a long position, it would start perhaps with where are we Fibonacci pattern-wise, and taking a look at the intraday setup from a not only a 50-tick perspective, but as well combined with the 1-minute chart for an intraday, but again for the long-term holder. And this can be applied to any of those charts shown in the tutorial at the beginning in the newsletter by using the combination of all 4 charts. When would be the best opportunity to enter into a trade like any other chart, maybe perhaps after a pullback or whatever other indicators that you may be using. So to recap one more time, as shown here on the charts, the top chart set to 2 moving averages, T3 moving averages, Tim Tilson's moving averages with an average true range, and a 50 and a 144. Second chart in the middle represented by the Guppy multiple moving averages to indicate not only chop but also trend, as well as a Heiken Ashi bar H.A. Holt study, which can be found on Thinkorswim or whatever platform you may be using to indicate continued trend of price action on any given market or index. Again, looking at the charts, using the average true range to give you support. Whether it's on a 4-hour, daily, or weekly, you'll look for the pullback on the smaller time frame. And then keeping you in the trend, whether you use the average true range as a stop, or whether you use the Heiken Ashi bars with a color background to keep you in. Again, you can go back and apply this to all the charts that are used in the study based from the weekly supplemental technical momentum outlook at this point, from the futures all the way down to the total stock market index that you may find each week in the newsletter here at tradingfibs.com. That concludes today's tutorial for the weekly charts. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My mantra of one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at TradingFibs. And as always, I leave the crystal ball to the experts. I only trade what's in front of me and on my charts. And as always, I leave my bias at the door when trading. If you have any questions about the weekly supplemental charts, please feel free to email me, David at TradingFibs. That's TradingFibz.com. Have yourselves a good day, a good night, and good trading.